Welcome to Economics Made Easy. I am Shudipta, your friendly explainer of all things economics. And today we are going to understand who really controls inflation. And guess what? Our dear Mr. Total Full is back to help us. Mr. Total Full stands in front of RBI building with a puzzled face. He said excitedly, I knew it. This is where they make the price too. Okay, not too, but yes. RBI is the central bank of India and it plays a major role of controlling inflation. But how does RBI do it? Let's find. Mr. Total Full walks into the main RBI door. Inside, he finds two more doors. One says monetary policy, the other says fiscal policy. Mr. Total Full confused. Two more doors. This place is like a game show. He heads towards the monetary policy. Yes, Mr. Total Full has made a smart move. Actually, RBI controls inflation with the help of monetary policy. But let's find the tools. Inside the room, the Reserve Bank governor sits at a large wooden desk. Around him, there are strange glowing machines labeled repo rate, reverse repo rate, CRR, SLR. Mr. Total Full confused, also scared, and said, are these tools or alien gadgets? Don't worry, Mr. Total Full. These are all very important tools through which RBI controls inflation. Let me break it down for you. The first one is repo rate. When bank needs money, it borrows from RBI at a certain interest rate. This interest rate is called repo rate. And when repo rate increases, borrowing become expensive and bank pass the cost on to us in the form of increase our EMI of all kind of loan like home loan, personal loan, car loans, even business loans. And once this rising repo rate slashed Mr. Total Full dream of owning a new car. Mr. Total Full had a dream to own a shiny new car. Confidently, he walked into a bank to get a loan. He hands over all his documents. A serious faced bank officer flips through the papers and said, Sir, due to recent hike in the repo rate, the interest rates on loans have increased. Your EMI will now be much higher. Mr. Total Full confused and panicked. But I calculated everything last week. Why now? Bank officer shrugs. Inflation control, sir. Welcome to inflation control. And so Mr. Total Full's car dream shrank into a tiny cycle seat. So sad. He walked in dreaming of horsepower and walked out with lake power. Jokes apart. Now reverse repo rate. It is just opposite. The rate at which RBI borrows from bank is known as reverse repo rate. And when reverse repo rate increases, bank thinks, why we lend our money to people when we can easily and safely park our money with RBI and earn interest? Results: less money flow into the economy. It is just like that we are turning off all the money tap to cool down rising prices. Do you want a real life example? See. One sunny afternoon, Mr. Total Full walked into the bank, huffing and puffing, dragging a huge sack of coins. He beamed, Dear banker, I want to deposit all my savings and maybe take a small loan too. But the banker, half asleep in his chair, barely looked up, not interested. He yawned. Mr. Total Full blinked, not interested in money. The bankers replied, "You see, Mr. Total Full, the reverse repo rate is high. That means our bank earns good interest just by parking money with the RBI. So we don't really need your deposit or feel like giving out loans." Mr. Fool stood there in disbelief, still holding his sack of coins. Now, CRR. CRR is the cash reserve ratio. It is the percentage of bank deposit that the bank must keep with RBI, no lending, no using of it, and RBI use it to control how the bank or how much bank can lend. I will explain you. Suppose the bank total deposit is rupees 1000 and the CRR is 10%. 10% of 1000, that means 100. The 100 rupees bank must keep with RBI and it can lend out the remaining 900 rupees. And suppose CRR increases to 20%, that means 20% of 1000, that is 200, bank must keep with RBI and remaining only 800 rupees it can lend out. But I will tell you a surprising story. I don't know you believe me or not. This rising CRR once made Mr. Total Fool dance. Sunny morning, Mr. Total Fool was dancing with joy, clutching his piggy bank like it was the crown jewels. Says, "Yes, yes, this piggy is flattered today. Just checked. My fixed deposit interest rate has gone up. I am rich, I am smart, I am genius." But wait, what just happened? Why did Mr. Total Fool suddenly earn more interest? When the CRR increases, banks have to keep more money with the RBI. That means they have less money to lend to people. So, to get more money from depositors, bank often increase interest rates on fixed deposits. Sometimes smart saver benefits even when the credit gets tighter. So, saving smartly can make you hero of monetary policy. Now, talk about the another silent guardian, SLR, statutory liquidity ratio. It is the percentage of bank total deposit bank must keep with them in the form of liquid asset, liquid cash and gold or government securities before giving loans. SLR helps bank enough liquid cash or liquid asset ready to handle any kind of sudden huge demand withdrawals or any urgent need. And when SLR increases, bank has less amount of money in their hand to lend. And this sometimes shakes some people's dream. Mr. Total Fool and his friend are sitting under a tree daydreaming. "Friend, I will start a dosa food truck and you will be my first customer." Mr. Total Fool, excited, "Let's go, get a loan right now." They reach the bank. A serious banker with a giant calculator look at them. Banker, "I am sorry, your loan cannot be approved." Friend, shocked, "But why, sir?" Banker replied, "Due to rise in SLR, we have to keep more money in government securities. We don't have enough left to lend." So friends, just like Mr. Total Full and his friend learn, monetary policy is a very important tool, whether it is CRR, SLR, repo rate, reverse repo rate, and they make or they help to control the inflation, assuring stability, and yes, sometime twist of our dreams little. But remember, monetary policy is not a hero, not a villain. It's a balance. It sometimes helps the saver, sometimes pinch the borrower, but this is how our economy stays in rhythm. In the next episode of Economics Made Easy, we will unlock the magic of fiscal policies. So don't forget to like and subscribe and keep asking questions, because understanding economics means understanding life.